Hi, this is Harsha Venkatesh from Dwaith Funds. I'm going to talk to you today about a very interesting book I had read probably more than a decade back. It's a book called Davis Dynasty. It's about a guy called Shelby Davis. So Shelby Davis was one of the most, I would say, gifted investors of the last century, which almost nobody has really heard of. You've heard of all the big names like Warren Buffett, Charlie Munger, all of these guys who are value investors or other types of investors. We have heard their names, but Davis is a very unknown name, I would say. So I will briefly talk about him, and I hope that it will help you as well in your investing journeys. Davis started investing, I think, in 1947 when he was 38 years old. So that's when he started buying his first stock. Since he was in the insurance industry, he said, I'm going to buy stocks in the insurance domain. He did not have much capital himself. Basically, his wife had inherited around $50,000 in 1946 or so, and he took that $50,000 from his wife to start investing in the stock market at the ripe young age of 38 years. And when he died, I think in the early 1990s, he was on the richest Americans list, and he was on the Forbes 400. So he was not yet a dollar billionaire by the time he died. I think he was around $900 million. How did one man who was not even a trained investor, how did he come into the field at the age of 38 years, started investing, and how did he make his money to grow that to $900 million by early 1990s when he died is a fascinating story. I'm not going to tell you the entire story, but there are a few key takeaways, I would say. Takeaway number one is Davis was not a financial analyst. He was not a fund manager. He had no experience in finance as well. But he really had a understanding of the insurance industry from which he came from. So he started investing in insurance stocks. And he did not invest in any other type of industry. All his life he was focused mainly on investing in insurance industry. So point number one is you should have extreme focus in what you're doing. Number two, he was not a guy who knew who are the players who basically will win in this market. He had as little or as much of an information as anyone else in the day and age in the 1940s or 50s. But the way he did that is by having a very diversified set of investments across multiple different companies. He was probably one of the earliest guys to go to Japan and invest in the Japanese insurance companies. In the 1970s, when a delegation of US industrialists went to Japan, he went there along with the entire group of around 50 or 60 people. But truth be told, 5 years later, when someone met him and asked him, hey, what did you do from the tour? He said, hey, I've bought a lot of these Japanese insurance companies. None of the other 50 people who had come with him, who had visited Japan, acted on what they saw. But Davis, when he saw that the Japanese stocks were trading for very cheap, he invested quite a bit of his money outside of the US. He took the risk. So that gives a lesson number two for us, which is you need to have your own conviction and you need to bet big when you think that there is an opportunity. And the third thing which comes to me, when I read this book, is he did not invest for like 5 years or 10 years and say, hey, now I'm happy and I'll go away, I'll retire and keep my money and have a good life. He kept at it from 1947 all the way till early 1990s. So that is like a period of 40 plus years. So he invested and he reinvested his profits, and he kept at it for a period of 4 decades. I think more than anything, keeping on doing what you really like to do and do it for a large number of years, decades to no end. I think 3-4 decades. I think this is super important. So I will leave you with these 3 thoughts from this book. One is, you don't need to be an expert at everything, but you can be an expert at one thing and do that one thing really well. Number 2, you need to have your own conviction. So if you think something is worth doing, you should go ahead and do it, and do it in, you should go all in with what you want to do. And number 3, you should keep doing that over long periods of time. It's only when you add time into the mix that compounding really works in the field of investments. So with that, I would, say goodbye, and I would highly recommend you to read this book, The Davis Dynasty by John Rothschild. Thank you.